You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's forex pair that we need to break down. The pair that I will be speaking about in today's video is AUDJPY because it is quite near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we currently have to show you where we can be looking for the next potential setup on it. And as usual, I will be keeping the analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds, so the non-commercials in the market, are doing both on the AUD and on the JPY. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setups here on AUDJPY. Now, starting from the monthly time frame, what do we have? Now here on the monthly, we have a market which has just provided a nice impulse to the upside, followed by this correction, and the market is currently providing the continuation to the upside. Now, generally speaking, after an impulse, correction, and impulse, what you expect is for the market to provide another correction to the downside. In fact, you would like to see the market correct all the way down to the 0.32 of the Fibonacci taken on the monthly impulse. So in this case, from the low to the high of this impulse. And we do expect the market to provide a correction at least to this area. So clearly here on the monthly, we are quite overextended to the upside and in need of a correction. And the first target, as we have already identified, is this 0.382. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see a completely different scenario. In fact, we can see how the market at the moment is actually trapped in between the structure that the market has provided at this high and the structure that the market has provided at this low. In fact, this market is currently bounded in between the previous resistance, that is basically this previous all-time high, which is once again resistance here, and again resistance here, and the support that we have at this zone. In fact, this area was acting as resistance here, and now that the market has broken into the upside, is acting as support here, again support here, and again support here. So clearly we are bounded on AUDJPY in between the resistance and support that we have here. And until the market will remain inside of this area, we can expect more ranging. Now, why is this area support? Well, there's a quick trick that you can use. You can go down on a line chart, and if we go on the line chart, we can see that clearly this is previous resistance, which is now turned support. And since the market at the moment is in between these two levels, we can expect the market to continue ranging inside of these areas. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Now, if we go down on the daily time frame, what we can see now here on the daily, we can see that at the moment the market has just provided a W formation. Move to the downside, move back up, move back down, and move back up. Now, generally speaking, after the creation of a W formation, what you expect is for the market to provide a move to the downside to complete the pattern at the previous resistance, turn support. So here on the daily time frame, what we do expect is for the market to provide a nice correction to go and complete the pattern at this previous resistance, turned support. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that on the AUD, net positions have been decreasing massively. In fact, we went from having 12.2k net positions all the way down to having minus 1.8k net positions with 58k shorts and 26k longs. In fact, long positions got decreased from an institutional perspective from 66.6k to 56.7k, and short positions got increased from 50.2k to 58.5k. So clearly, from an institutional perspective, the AUD is getting weaker. And if we go and see what we have on the JPY, we can see how on the JPY we have been getting even weaker. In fact, we went from having 50.5k net positions all the way down to having minus 59k net positions. So we went from having way more longs than shorts with 63k longs and 13k shorts, all the way down to having the completely opposite situation, so way more shorts than longs. So we have a weak AUD and a JPY which is even weaker than the AUD, and that is why we have been creating first the move to the upside, then the AUD has been getting weaker, and if you have a weak currency against a weak currency, you do expect the market to move in a sideways way. And in fact, we can see that that is exactly what the market is doing, as we have already also identified on the weekly. And this is a quite clear concept. If you have a strong currency against a strong currency, you will have a sideways market. If you have a weak currency against a weak currency, you will have a sideways market as well. But if you have a strong currency against a weak one, then you will have an uptrend. And if you have a weak currency against a strong one, then you will have a downtrend. That is obviously just a basic thing. So in a situation like this, in which we have a ranging market with a weak currency against a weak currency, what kind of opportunities we can be looking for? Well, in a ranging market, W and M formations are very good patterns which have high completion rates. And the completion of a W or M pattern is at the neckline. So in this case, since we have a W, we can expect the market to go for a completion at the previous resistance turn support. So how we can be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So inside of this area, what we will be doing with students is monitoring price action from a 4-hour perspective and lower waiting for the market to shift from a 4-hour and lower bullish market as we have right now to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding AUDJPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is this previous resistance, now turn support here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.